right now, market participants are still counting on 2 rate cuts this year. Does that sound appropriate to you?
It feels right, but it also feels wrong. And so what I mean by that is that I think it's a probabilistic weighted thing. And so the way I view it is that I think Jay Powell shouldn't cut rates today, right? If we look at the latest inflation data, it is starting to tick up a little bit. When you dig into core goods, you start to see some of that tariff pressure appears to be building. Again, it's 1 month, so we won't make a big deal of it yet. But we do think inflation has bottomed for the year. Take a look at break-even spreads, right? The market participants have started to put that in the 1 and 2 year kind of break-evens in a tips market. So when you start to look at where the market is pricing, they're asking about that. They're pricing cuts, but they're also pricing higher inflation. And so when I think about Jay Powell and what he said over the last few meetings, right, he's focused on the labor market, right, because the inflation data isn't supportive of the rate cut yet either. And so I think you would have to see degradation in labor. So when I say it feels right, it's kind of like on the basis of, well, if they have to cut, they have to cut because there's erosion in labor and a weakening economy, and maybe on that side you get to that kind of 50 basis points. So right now we're kind of playing for no rate cut today, but then you have this concept of the shadow Fed.